So I'm going through some documentation, and a lot of times we get asked about what fees are associated with my loan. So I want to kind of go over that essentially section by section. When you are purchasing a home or getting a refinance on a mortgage, you're provided what's called a loan estimate. Your loan estimate is broken down into roughly 6 sections, okay, in regards to your fees. You have origination, services you cannot shop for, services you can shop for, taxes, and escrow. That's really the main item. So call it, 5 sections. So we're gonna go over each section one by one. Section 1 is your origination fees. These are really your lender's fees. Whether you have underwriting, which typically goes to the lender in regards to underwriting your file, reviewing your file. You may have discount points. That discount point is the cost for the rate. So I talked about this in different videos, but for example, every lender has access to the same rates, but it's just the cost of that rate that makes a difference. So for example, let's say somebody wants a 5%. Well, the cost for that 5% may be whatever the loan amount is with the points, because it's a percentage, that cost may be $15,000. Well, if they take a 6%, that cost goes from 15 to 0. So those happen all the time. Those items can fluctuate depending on, the loan, the profile, things like that. So those discount points are really the cost for your interest rate. Some lenders will charge an origination fee, flat fee, a percentage of the loan, but that's a fee that goes directly to the bank. It's a fee for doing your loan. There may be a processing fee in Section A. There may be a application fee in Section A. Each lender may have their own individual fees that they charge for that section. Okay, that's Section A, origination fees. Section B, this is services you cannot shop for. So what that means is these have to get done for your loan. Like, for example, a credit report. You have to have a credit report. An appraisal. If you have to have an appraisal, the appraisal will be in there. You can't shop around for your own appraisal. You can't shop around for your own credit report. Sometimes there's a processing fee in there that you have to pay. You can't shop around for your own processing. These items are like finite fees. No matter what the loan amount, no matter what the loan type, these fees are roughly the same, okay? There may be something called like a flood certification to make sure the property is not in a flood zone, a condo fee, handful of items. These aren't fees that can be shopped around from service to service. They are kind of just set in stone no matter what they are. C, services you can shop for. This one's kind of iffy because depending on the state that you live in and depending on the transaction, you may not be able to shop around for it. So let me give you an example. This section is made up mainly of title fees. So when you purchase a home or you refinance a property, anytime you do a mortgage, you're required to pay some type of title fees. There's a fee for searching for the title, making sure it's a clean title. There's a fee for recording the title. There's a fee for preparing the documents. Each individual title company decides and dictates their own fees. Us as lenders have no connection to what those fees are, okay? Those fees are directly set by the title company. The reason that section is labeled you can shop for it, in most states, whether it's a purchase or a refinance, if you wanted to as a buyer or a consumer, you can shop around and find your own title company, okay? But there are some weird situations. So for example, in the state of Illinois, it's typical in a purchase transaction for the seller to dictate the title company that the buyer would use. So it would be one company that does the title work for the buyer and the seller. We think, that may be easier. Yes, but at the same time, you have no control over that title company. What if they suck? What if they're slow? What if they don't answer emails? What if they're really expensive? You have no control over that section of your fees. In Illinois, for example, we do a good amount of business there. We tell buyers all the time, hey, this section is subject to the seller. If they pick an expensive title company, you're stuck with that title company. So it's just something to consideration. The remaining items are third-party items or outside the mortgage. They're almost identical from lender to lender. So this would be your taxes, your prepaids, and your escrow. Okay, there's 3 final sections. Your taxes, this would be any type of transfer tax liable for one. It could be recording fees or county taxes. That's directly set by the counties where you're buying a home or where you're living. The next section would be your prepaids. So let's say you're purchasing a property and you're escrowing or you're getting set up for the future. You want to make sure that you have enough money in an escrow account. Your prepaids have a handful of items in them. They have your insurance, they have property taxes, and they have prepaid interest. Okay, so if you're purchasing a home, you have to pay for 1 year of insurance up front. That amount goes into your prepaid section. So whatever insurance that you pick as a consumer, we have to pay for 1 year up front. The other next item, your prepaid interest. Depending on the day of the month that you close is how much prepaid interest you're gonna have to pay. Because the way mortgages work, when you make your payment on the first of the month, for example, you are paying for the interest prior to that day, okay? You pay your interest in arrears. So if you close on the first, when you make your mortgage payment in a month, you're paying 30 days of interest. If you close on the 10th, you're paying 20 days of interest. If you close on the 20th, you're only paying 10 days of interest, okay? So you're just prepaying that interest for the time that you're in the home. And then prepaids also, let's say you're setting up an escrow account and you wanna make sure taxes are ready, you're prepaying the taxes ahead of time. Say, hey, we're gonna take that money, we're gonna put it into an escrow, or take that money, we'll pay the taxes right here, right away, okay? And And the final section is your escrow. This is the main final section. If you elect to escrow on your mortgage, you are going to be collecting for taxes and insurance every single month. But your taxes and insurance are not due every single month. They don't get paid out every single month. They typically get paid out once to twice a year. So your escrow account, which they set up for you, will always change depending on the time of the year and when the taxes are due. So for example, we just said you pay your insurance up front. Well, now the escrow account that we're setting up for you is going to pay the insurance in a year from now. But let's say you close on a property March 1st. You don't have a mortgage payment until May 1st. So you're skipping a month. You're technically not making a payment for 2 months, March and April. So what happens, you have to fill up your escrow account accordingly so that in 12 months from the day that you close on your property or you close on that mortgage, 12 months later, you will have another 12 months worth to then pay your insurance renewal a year later, okay? In your initial escrow, they'll set aside 2 additional months for homeowners insurance in the event that you don't make a payment for 2 months post-closing, okay? Same thing goes with property taxes. If your property taxes are due in 6 months, they need to make sure that there's enough payments of taxes already included in your escrow account at closing to make sure by the time you get to your tax bill, by the time that it is due, you have the money in there ready to go. You don't want to have what's called an escrow shortage, then your payment shoots up. That's a whole other video. I hope that answers any questions. There may be a couple other fees here and there that we didn't cover that are just sometimes on a loan-to-loan basis or a property-to-property basis, but this is the bulk of your fees. That's what they make up for. Origination, services you can not shop for, services you can shop for, and then really taxes and insurance. That's really the bulk. If you guys have any questions, let me know. Call me anytime. Leave a comment below and go ahead, click that video to the right for some more great mortgage content. So we're shooting a video here. It's kind of just like day in the life, just because I get pulled in so many directions, kind of like showcase what it is. So we have one of our LOs came in, can't figure out how to get the system to work. We have the file and structure correct, but can't figure out where